on Cineverse. We're in touch with management. We own a lot of stock. I think our last podcast, we talked about Cineverse. We highlighted it in the twos. And again, it hit 740 in July. So that was a great return. We only sold 20% of it because we think it's worth a lot more. So what happened is they did so well, and they had 3 movies coming out. One of them which was not really a horror film, but they acquired it. So the whole model is you acquire the IP, and then you spend some money on marketing, and then you run your rails, so to speak, in the pipes of your marketing. Go to market under $5 million. And the way it works is you get about half the revenue in the box office, and then you have ancillary revenue streams down with streaming and selling merch and selling DVDs, or license it to some of the big streamers. So what happened was they made some really good money on Terrifier 3. It was the biggest unrated hit at 54 million. They had another encore quarter because of some of the downstream revenue associated with that. And then the next quarter was a shoulder quarter. It was a little bit soft. Expenses were a little bit elevated. When I talked to management, they had the SOX and the public traded costs associated with that. And then there was also the marketing expenses because they bought Toxic Avenger, the full right. So it flows through the P&L a little bit differently. Long story short, it didn't do well at the box office, but including the downstream revenue with the streaming, they'll still probably break even. So this is the type of risk that you want to be taking, that I don't fault management at all. They bought some decent IP with name brand actors at a very low price. They used their network, and for whatever reason, they couldn't position it right, or it was over Labor Day, which was beautiful, and it just didn't land. But again, they're going to break even on this. Stock has gotten hammered. Now they have 2 movies coming out, Silent Night, Deadly Night in December, which was banned in the theaters in 1984. That's right down the middle. If you're thinking baseball, it's a fastball right down the middle. That should hit their genre, their audience. They know how to market to that audience. There should be some pent-up demand for this, given that it was censored in the 80s. And they're smart. They produced it, so they own the global rights, and they sold the international rights to recover 2/3 of the cost. And then you have a lot of other optionality in that they own Cinesearch, which is, they claim, is the best AI search tool for movies. They built it with Google, and they're talking to big television OEMs for smart TVs about trialing it, about hopefully landing a licensing deal. They have Match Point, which is a really compelling technology, how to distribute, because they stood up these fast channels, they stood up these streaming channels. They've talked to all the Hollywood studios, big companies. They think they're close. They have to land a deal. But if they land one of these deals, they mentioned on the conference call, maybe $5 million. This would be a SaaS software deal. It's a whole different multiple if you can land one of these. And then once you have proof of concept, you probably land another deal. If they land one of these deals, the stock probably doubles on that alone. And again, they've stood up all these different channels. They have the 360, the ad piece. There's some compelling aspects of that they talked about in the conference call. I've talked to management. They're really smart. They're disciplined. Balance sheet's clean. There's no debt. About $8 million in cash. You can tap the different financing markets for movies, but again, they're sticking to their playbook. But this is a big position, and in July, we're up massively, and like I said, we sold 20%. And you take this big drawdown. We have aggressively added, so I've never been bigger in terms of dollars invested. I added aggressively, some in the 5s, and then a lot in the mid 3s. I'm in it to win it, and that's the game, and that's what I'm trying to do. But it does get a little bit annoying how much hot money evidently was in this name, and that they were just looking at this as an event. Okay, the August movie didn't do well. I'll revisit this in December. And so the money rushes in, the money rushes out. You take these big unrealized marks on the P&L. But again, it just doesn't make any sense, because I think I understand the business. I think I understand the nuance. It's just so mispriced from an optionality standpoint of what can go right with multiple ways to win. how am I able to buy this company at a valuation of what, 75 million bucks? Well, again, with no debt. It's not like they have onerous debt where they have to worry about they can make the payments when they roll the debt. That's not the case here. But those are the swings.